Well, welcome to another Workshop Wednesday brought to you by schoolofbookkeeping.com, which is casual conversations for serious workflows. Like that little caption there.
Used to our little
To,
tagline here.
yeah, I like that. So today, actually joining us is we're graced by Matthew Fulton, um, of is it I always get it wrong. Is it Pathway Parkway Pathway?
Parkway Business Solutions, but primarily QB Community Live, the Facebook group. But yes.
All right. Well, thank you for joining us, and we're honored that this is your first live stream in quite a while. So I appreciate you
Dust off
using this as
the
a
cobwebs here, man. Try to get used to doing this again. So get me back into fighting weight. Thank you.
right. That's right. Well, you look good. Talk a little bit about you, Matt, as far as your QB Community Live and the projects that you got working on. Just for those that don't know, like, who the heck is this guy?
Well, thank you. So after basically taking about a year and a half off, trying to reset myself, figure out, I think a lot of accountants out there have kind of been starting to feel burnout, that type of thing. And I ran into it pretty quickly. So I took some time off to readjust and find where I want to be recentered, and been coming back, focusing back into the QB Community Live group to build that up. Love working with community, helping share knowledge with others. So that's a cornerstone for me. And then I'm also doing a lot of work with different app companies to try to help them better connect with the accounting community, and making sure that the stuff they're doing connecting to accounting apps is correct. For example, LedgerSync is one I've been working with some time now, and helping some of the stuff they're doing on the back end.
What is LedgerSync? For those that don't know.
Good question. So LedgerSync it's a great application that basically gives you a unified dashboard for all of your, as an accountant, for all your different clients' accounts, bank accounts, financial accounts, so forth. So you log in there, have your clients connect, and it pulls in all your statements, your transactions, and for the institutions, allow it to check images as well. So you're not having to log in back and forth to all these different locations all the time. It's all secured in one place. You can have your team members in there, so you're not having to share passwords that way. It's just a major time saver that way, trying to fetch all this data. Love it. We've been working with them for years.
Yeah. We actually used it for a short while. With desktop, so it was a while ago.
Desktop especially, it's a no-brainer with desktop. Love it. So it's, so staying in the accounting realm. I love this environment. I love what I do, and just finding new and exciting ways to chase my passion instead of just chasing clients all the time.
Good deal. So, and you had created a really nice video about the topic that we're going to be talking about today, the QuickBooks pricing update or pricing changes. And and I reached out to you and said, hey, like, why don't you just come on the workshop, and we'll just link arms and kind of unpack it together. Since you have a good understanding as to what the changes are, the dates and everything. So I appreciate you being so gracious to join us here today. So thanks again for joining us here. So do you have a link? Do you have a link that we could share for the video for those that might want to review Matt's take on the on the pricing change?
I'll grab that, and we'll get that over to you in just one quick second here. It's on my primary profile, but we can definitely get that shared over. So
okay, perfect. So this is what we're talking about here today. Is this seems to be an annual conversation, right? Where and it's not it's not limited to QuickBooks, right? I mean, we're fielding a lot of these conversations with other apps that we're working with. Maybe when you started with a company or working with a company, you were in a really great plan, and a lot of them are now going, we've changed our prices 5 times since then. We're kicking you out of the the legacy account that you were in. But this is now seems to be a yearly conversation that we're having about the QuickBooks Online pricing changes. So we want to kind of unpack that and see and really just kind of talk about how that impacts companies, right? So let's go ahead. We have a blog here on School of Bookkeeping where we've kind of broken it down by product type, because it's not just QuickBooks Online. It does have to deal with payroll and payments, which was, I didn't realize that was coming either. So, and that seems to be, kind of on looking at it from my perspective, that seems to be the biggest change. Would you agree,
Agreed.
Matt?
Yeah, I do. And so one thing I always like to kind of say when it comes like these pricing increases, as somebody that's worked on trying to develop my own app at one point in time, and then working with different companies, there is a reason they have to do this. Like, software development is not cheap. It takes time and energy and time and money and money and money and time to do these things. So these increases, it's because, look, there's increases all the way across. So the software side of it, we actually saw pretty minimal increases this year. And I agree, it's more in the payments plan structure is where we saw a lot of the changes.
Yeah, so let's go through the QuickBooks Online pricing changes, which seem pretty straightforward. It only seems to be Essentials and Plus and self-employed. Do you deal a lot with self-employed in your practices, or?
No, we've had some people that started off with self-employed, but we've always been excited to see when we're able to help them evolve their business up into a higher level product. Trying to really get them into more of the simple, smart, or essentials, where they can start tracking more aspects of their business. So
Yeah,
we've kind of avoided self-employed at this time.
yeah, I think that's a pretty common from the accounting perspective. Accountant and bookkeeper, right? I mean, you can't even reconcile the account, right?
Yeah.
That's like a deal breaker for a lot of accountants. Carrie, do you agree with that?
If you can't reconcile, then you've just had garbage. I mean, you can't. You can't.
You nailed it.
Tell us how you really feel.
Too much room for error. I mean, you've got to know if you've got duplicate entries, which can happen. I mean, we were talking about using apps like LedgerSync, but things happen and you get the same, a bank connection will fail and you get duplicates and things like that. You've got to be able to balance that out and make sense of it.
It's just the nature of the beast. And so what I find is with Simple Start, is starting at least there, that evolution of a business is so easy. It's just a click change and you can upgrade and add new features on. So that's, again, why we like the higher ones.
Except for self-employed.
Right. So
It's its own
self-employed,
land.
I've never had like a really good pathway to upgrade. It was either I mean, there was a point in time where you could click upgrade, and it would go into the QBO ecosystem, but it was hit or miss, right? It was more of just reconnect the bank feeds and start over.
Sorry.
Yeah.
Let's start over.
But those are increasing as far as the monthly price increase. It makes it's real easy it's $5 right across the board.
Yep.
With the exception of Simple Start and Advanced, right?
They're leaving everything with a 0 on the end. I'm 20, 30, 40. So
until next year, pretty much.
So we have this conversation next year.
Yep.
All right. So as far as the dates of when this is happening, so August 1st, new subscriptions will see the new pricing. September 1st. So if your billing starts, if you're a current subscriber, your billing will increase after September 1st. So always the question is, why August 1st? Where did this date come in?
Oh, I know the answer.
Yeah, go ahead, Carrie.
Can I answer?
Go for it.
Ooh.
That is into its fiscal year. So most everybody is, 12/31 is their ending, January 1 will be their beginning of their fiscal year, but into its land, it's August 1st. So all the big changes is they say Happy New Year and things like that, because that's their tax year.
That's their new fiscal year. So we do have a link to the Intuit Firm of the Future article here. So if you do have a question about that's more directed towards Intuit, you can certainly check that out here off of our blog. So annual pricing, there is an increase across the board for those that are impacted by this price increase. So you can see that that play out here. So that brings up an interesting option, right? So if you are a current subscriber and you're on monthly billing, if you do switch to annual billing, right, before the price increase, you could feasibly get in on today's pricing for a year at least, to try to avoid the price increase, at least for a year. I mean,
That's a good
an
point.
option there, right? But do it now before before it increases. The challenge of that is that if you're in a promotional pricing, like if you're in your first year, by doing that, you're going to typically lose the promotional pricing when you switch to annual. So that's one option, that you have to, to maybe
Save for
deal
a couple months.
save for a little bit, because you actually do get a 10% discount on the annual pricing. So you're actually avoiding the disc. I mean, you're getting a discount on that, and you're also avoiding the price increase until the next renewal time, which would potentially be a year from now.
And a key thing, which you kind of touched base on, is if you do, even if you have promotional pricing now, that will still be honored through the end of that promotional pricing, even with these changes. So as the changes occur, that promotional pricing stays the same until that runs out, and then any new
Right.
pricing would take effect on everything we're talking about today.
Yeah. But that your
Unless you
base
touch it,
price,
unless you
right?
make
Your
a change.
Exactly.
You have to be real careful. If you change it from monthly to annual, you have to be careful. Or flavors. If you change from, upgrade, you can lose that
Great
promotion.
point. Great point. So then the payroll is another area that they started to do some changing this year as well, right? This one I found was a little bit more complicated unless you kind of slow down and read it, right? Because basically the core pricing, what they did is they changed the price per employee at the core pricing, but on the premium, it was the base that changed. So core starts at 45 for the core amount, and then your per employee price, what is currently $5 per employee, that's changing to still the same 45, but your per employee will be $6 per employee per month.
Right.
And then your premium, the premium has a current base of 75. That base is going up to $80, but the per employee at $8 per month does not change at all. And then elite, no changes on that whatsoever. That stays the same.
Right. Yeah. So I mean, big takeaway there is that their top tiers, right, between payroll and QuickBooks Online are not changing at all. It's just the other lower levels of both payroll and QuickBooks Online are, with the exception of Simple Start. But yeah, I mean, in core, it's just the employee, whereas payroll, it's just the base. I'm sorry, and the premium.
Yeah.
Excuse me. So what is your thought on the strategy there, Matt, as far as these two different changes? Because what I'm looking at it is like, okay, well, now if I compare premium payroll to core, now my per employee charge is really only $2 difference. And if I do have time tracking, because that includes the time tracking feature, really that's only $2 per each employee for time tracking.
I think that's exactly what they're trying to do. Is they're trying to slowly, I want to say, kind of creep the prices or get the prices somewhat closer together, where the value add of going up to premium is just a no-brainer because that time tracking capability. When you start combining the QuickBooks Time with QuickBooks Payroll and QuickBooks Online, that functionality, it just saves a lot of time trying to process everything.
No pun.
Exactly. Time and money, right? So
Yeah.
From that side, I think that's definitely where they're going with it. I also feel that, that per employee price, if you go too much higher per employee, that people notice that faster. So I think that's why at the higher ones, that didn't change as much, because I can rack up quickly. I mean, if you've got 15, 20 employees, that's a much bigger increase from that side.
Yeah, and that's always kind of been my my thought about the upper tiers of the payroll, is that this per employee charge is whether or not they're time tracking or not, right? So
Yeah.
so if you have 20 employees and only 10 of them need to track their time, that value somewhat diminishes, because done with core, and another time tracking system would be more economical for me, even though it's not bundled in. It loses some of the luster or the value when it's not being used by half your employees, for example.
Yeah, and unless you start using it for stuff like projects and you're trying to actually allocate even just those 10 people, where is their time? What's that expense? And if you're tagging it to a specific client and a specific project, that's a huge, huge win by using the QuickBooks Time portion of it. There are other time tracking apps that you can do some of this with, but it's just not as efficient. It just really isn't, because they don't have the same access to like the projects area as an API. It has to be done completely different, where you have to create it first and then pull it over to a different time tracking app.
Yeah, that's the more that things are integrated, the more you can get out of QuickBooks when you're bundling those things. We love payments, we love some of the payroll functionality, but yeah, it's that is where Intuit has a distinct advantage, because they can play with the API more so than what other apps can work with.
Yep, they're sucking us into the Intuit sphere, as I like to call it, right? So the dates wise, same concept on that. August, the August to September 1st are those magical dates again. Your August 1st is going to be basically August 1st is almost always everything that's client billed on that side. So your payroll core changes client billed subscriptions August 1st, and the premium client based subscriptions. September 1st is anything that's being accountant billed, is where that change happens.
Right. Now this was a sneak in here that I didn't. this little. They're introducing an annual billing for customers who have client billed subscriptions. They can switch to annual billing
payroll?
and save 10% for billing and subscriptions. Yes, because it's in the payroll section.
Payroll.
Yeah.
Okay, that doesn't make sense to me, because payroll is so typically payroll is
I'm not sure how that's going to play out, right? Because employees, they add, they subtract, mid-annual. I'm not sure how that's going to play out with an annual billing.
If it's just the base monthly fee, that would work. It's the per employee. There's no way that could be annual. That would have to just be as going.
Might be a hybrid.
Yeah, it would be a 2 billing thing. So that's I like that.
Sounds like a reconciliation nightmare.
Well, there's that, yeah.
Right. What happens
My
when
favorite
you
word, but
add
not
or
the
fire? If you add or fire an employee, mid-annual billing cycle, what happens, right? Do you get
Well, I don't think that unless I'm missing something, I think that the employee thing would not be annual. That would be separate.
Employee, I've already paid for you for the whole year in QuickBooks, so I'm just going to have to keep you on.
Yeah, there's no way that part's annual.
Yeah, you can't leave now.
We already paid for you.
You're going to give your 2.5 months notice, because you're still paid for. I wonder if that's in here. Let's see. This is the FA outward. Let me get to, here we go. Discounts. Yeah, so there's not much about that. Here on the FAQs on the Firm of the Future, just talking about annual billing, right? Who pay for their own subscriptions. There's an asterisk, so it's usually down at the bottom. Limit time discount for subject to additional terms and conditions. Yep. So no answer there on the FAQ. If any Intuit employees are listening or watching, we would like a little bit
See,
more.
Landon's agreeing with me.
We
He
can
thinks it's
follow back up on this and put some comments on it, because that was something I totally missed that one as well. So good catch. It'll be an interesting one.
See how
it's just the bit,
how that
the
plays
monthly
out.
fee that I just know I'm right there.
Well, so the biggest area I think is the next one,
Yep.
right? Is that merchant processing and
Mhm.
all of that. This is where everybody I feel needs to pay the most attention to it, and most specifically ACH.
Mhm.
I will say that when I looked at the pricing, that their new pricing that they'll be doing, and I tried to compare it to a Stripe, a Square, and a PayPal, Intuit's pricing is still coming in just below everybody else's, to where
Mhm.
they obviously did their research onto that side. They're inching a little bit closer, but they're still below. The ACH, though, that's the area, depending on how it's set up, where your pricing could dramatically increase.
Yeah. So let's go down to the standard rates so that you can so that we kind of play that uh, unpack this, right? So and this was another one of those annual billings that kind of just snuck in here with little fanfare, but it has huge implications, right? So let's look at the standard rates. Let's kind of currently, well, I mean, some of the things across the board, right? The per transaction fee is being eliminated. There was a monthly option,
Yeah.
which would give you lower rates for the monthly fee. That's being eliminated. So simplification of the transactional fees is definitely you know what's driving all of this. But as far as what what options are available, then now we have really two, right? You have the pay as you go standard rates, or you have the pay as you go pro advisor preferred pricing, um, which is if have a pro advisor refer your account, then you get lower rates off of that. So yeah, the big thing there is the invoicing ACH, right? So currently it's 1% with a maximum of $10. New pricing for existing customers, that max is now being increased to $15. So if you're charging somebody an ACH of $5,000, the maximum you would pay today would be $10 on that ACH. That would be increased to $15 for existing customers. But new prices for new customers as of September 1st, it's just a flat 1%. So if it's $5,000, that fee is now 50
50.
bucks.
Yeah.
Right.
So to
That's
stress, and like you just said, and to stress this part, what this is 100% saying is, as of September 1st, if somebody brand spanking new comes in that has never had a merchant processing account, they come in and connect, that cap would go away, and it would be a 1% for whatever charges they go through per transaction. If they already have an account, they're already connected now, that max becomes that 15, like you said. So the only way around this is if you bring on, let's say a client as an accountant comes to you and they set up their own merchant processing after that September 5th, they can connect to your accountant. They can run through you, basically your Pro Advisor program, but both you and the client will have to call into Intuit Merchant Processing to make that request for that change, of course.
right. So we've talked about this in a prior workshop where we've talked about the new accounts kind of getting this half created QuickBooks account just as part of the whole setup interview process, where of course by doing that now you're opting into the standard rates at that point. So you definitely want, if you're working with an accountant or if you are an accountant and working with a client, you could be a lifesaver, especially if they are, you know, potentially going
A
to
lot
be
of
using
ACH.
ACH to
Yeah.
saving them a lot of money, which could potentially offset these other increases that are up here, right? Like, so if they're doing high volume ACH transaction, you know, that will definitely cover the cost of the pricing increase by saving them some funds there. And we have on School of Bookkeeping, we love payments. We love QuickBooks Payments, you know, because it's a big time savers. You know, the doing your billing and your bookkeeping at the same time is a phenomenal time savings, right? So like after you send the payment or send the invoice, you're pretty much done, right? With especially with QuickBooks Online, because it'll create the payment for you, it'll process the fees, it'll automatically reconcile the transaction. I mean, they pretty much after you send it, set it, forget it, you know, type of thing. You know, those things. Well, they should be automatic. Doesn't mean that they are, but we have a QuickBooks Payments course that's available. It's totally free to you know, to review. And if you are an accountant or if you are a client and you would like to participate or opt into these Pro Advisor preferred pricing, because we'll talk a little bit about that. Notice um, it's still capped at a maximum of $10 from here, right? So even you know, those, I mean, changing over, like if you're brand new, definitely, you know, do this. And then there's the existing ones, you really can't change, you know, those types of things, especially if you've been using it for, you know, for quite some time. You want to catch it pretty early. But if you're brand new and you want to opt into the Pro Advisor preferred pricing, um, these are significantly less than the standard rates, especially with the ACH. Matt, you would agree with that?
Yeah. So when it comes to even just the merchant processing, it's across the board. It's almost zero point 0.2 below everything otherwise. So, you know, the card reader is 2.5 for the standard merchant processing outside of us. We've got 2.3. The Keaton's 3.5. We've got 3.3. Invoice card wise is 2.99 for everybody else. We're at 2.8. So you're saving money there. And then the ACH, like you said, it's a no-brainer that the max of a $10, because it's so easy to hit that $10 max. So easy. One question I've had a lot of people ask me is, hey, how do I know which of these plans I'm currently on? Where can I look
Mhm.
and try to find what I'm currently paying? The best answer, maybe you guys have a different answer, but the best answer I've had is inside your QuickBooks Online company file, you can go into the, gear icon, go to your company settings, go to payments, and you'll be able to see your statements right there. Pull up a statement and look at what your charges are on there to be able to evaluate what you're being charged in comparison to what you're seeing as these current rates. Is going to be one of the fastest ways to really figure out what kind of a change you need to make.
Yeah, I mean, it doesn't list out there standard versus Pro Advisor, but you can see, like, based off of, you know, comparing your statement to what you see here in our blog or online, you can determine, okay, well, if I see 2.9%
Yeah.
for an invoiced transaction, okay, that I know I'm on the, you know, the Pro Advisor, as opposed to, well, and that was a bad example. It's the same. Keyed in, right? We'll go with the keyed in option. And keyed in is not necessarily keyed in, right? Like recurring transactions are actually considered to be the keyed in rate rather
Great
than
point.
invoiced. So if you have a recurring transaction where you're recurring billing for like a subscription or something like that, that will be considered the keyed in rate versus the invoiced, because, you know, the risk is still there, right? Is even though
Yeah.
you have it saved and it's you know, it's PCI compliant and you can't see the credit card number, there's things of that nature. Anything could have happened between, you know, the last time it was charged till now. The risk is, you know, the further you are from actually holding the card, it gets a little more riskier of a transaction. So they have to kind of pay for that. for that risk. They roll that risk into the transaction fees, because as we talked a couple weeks ago, there could be a dispute, and then there's a potential dispute process,
Yep.
which I am currently undergoing with my situation with my client that I charged twice on the same day, legitimately, but I still needed to prove that.
Yeah, they
Not
even
bitter.
have a new dispute protection also, don't they? That they're offering.
Yeah, we did talk about that also a couple weeks as well. So there's the dispute protection where you pay an additional 0.99% on every transaction, but then you don't have to prove that your charge was legitimate or not. They'll just pay it, and you move on.
So moral of the story is if you have these recurring invoices, get them all over to ACH. It's obviously going to be able to save you some money. That's a lot
It's going to
easier.
save you money until there's a dispute.
Good. Yeah, that's definitely a possibility.
Or
Yeah,
a bounced ACH.
ACH are not my preferred method because if they disputed it's ugly. So it's much cleaner when you're dealing with
And
credit
then you
cards.
have that nasty needs attention alert on your dashboard that you have to figure out how to correct
Oh,
just
we
because it's
had
a
a thing on
dispute.
that too.
Yep, we've done that too.
So one of the things actually that was brought up in the meeting when we first learned about these upcoming changes was the fact that Intuit is actively working and improving the process behind the scenes of how you interact with your merchant accounts. So making that switch over from a client subscribed one to an accountant version, they're expecting by end of their fiscal year, end of this year, that process is supposed to be dramatically improved. So you don't have to you're not calling them on the phone with the client saying, hey, blah, 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 blah. So in the future months, we should see improvements to that for sure.
And is there and I missed because I was looking at the blog itself. You were saying, is there a time limit of switching those things over? Like how
Not that
long?
they shared with us. It's a good question that we'd have to follow back up on, but they didn't share that with us. They did so, if somebody had been set up for 6 months and then they came into you, fundamentally what I heard, we'll reconfirm, is you can still bring them over at any point in time. That process, it's not easy peasy, like super fast and like slick yet. Maybe it will be improved, but if they're doing a lot of processing and it's a great value add for the client, you both have to be on that same phone call with the Intuit merchant processing to make it happen. So it takes some doing.
It does take some doing. So appreciate you joining us today, Matt. It was really really great to have your insight. Carrie, any final thoughts on anything that we've talked about here today?
I think this just really gives highlight to how valuable a pro advisor can be to their client with that special pricing. So hopefully people have picked up on that piece as well. So
Amen.
All right. Well, thanks again for joining us, Matt, and thank you all for tuning in. We are going to take a little bit of a break because on the weekly
look at
workshop,
travel.
because I'll be somewhere in the Pacific. My son is in the Navy, and he's invited me to join him on an aircraft carrier for a few days. And on top of that, we have Scaling New Heights, which I won't be able to go to.
I will be there.
I'll be there.
Yay.
So we'll pick this back up after the 4th of July. So we'll see you in a few weeks with the workshop, and you all have a great day, and we'll see you next time.
Thanks for
Thanks, Matt.
joining, Matt. Everyone have a good week.